Welcome back, and let's have some sound. Let's get straight into the down and dirty and enjoy the fact that we are looking at management accounting budgeting. Now, in order to make sure that we can do this properly, what we're going to have to do is to get to the absolute basics of budgeting and understand how budgets work. When you look at task 2 of budgeting, the key here is to be able to prepare a budget. So my first question to anybody out there is this. When you prepare a budget, where do you start? What is the norm? Well, I think that a lot of us know that we start with something called the principal budget factor. And that principal budget factor is typically sales demand. And what we want to do is say, well, look, given that that is what the demand is, what do we need to fulfill that demand? Now, we typically see these questions based around some sort of production environment because that's where all the fun is. So what you do is you start with your sales. And if we know our sales, what should we be able to calculate? Well, if we know how many units we wish to sell, we should be able to determine how many units we need to produce. But of course, there is a difference. There is an increase or decrease in finished goods stock to potentially be aware of. So given that we add or subtract that increase in finished goods stock, we can take the sales and determine what our production unit. So we're sort of working backwards through the production process. Now, once we've got there, we can then go one step further and say, well, look, if we know how many units we have to produce, we can then say, well, how much material do we need to produce those units? So what sort of material usage is there? And of course, if we know material usage, we could then say, well, okay, if we know how much material we have to use, we could also determine the amount of material we have to purchase. And the only difference between what we use and what we purchase would be the increase or decrease in raw material stock. And of course, that will give us our purchases. So these are the sort of things that we may have. Now, another thing that we have, of course, is the joy that you may have to prepare our labour budget as well, which again, we would expect to be variable, to vary proportionately with the number of units produced. So it's these sort of linkages that we've got to be ready to deal with. These sort of linkages that we've got to be aware of. And what you have is them sitting there in front of you. Now, that's the base. You've got your base. Sales to production, production to material usage to purchases, and material and production to labour as well. These are the sort of things. The other thing, of course, you may get would be a situation where you've got losses. So we could have losses anywhere, but typically what we would see is that we get losses, for example, in a production environment somewhere here, or possibly in purchases here, or possibly in material usage here. They could arise wherever the examiner wants them to arise. And these are the only two things that we have to deal with in order to be successful in our analysis. So let's go and look at what the examiner has in store for us. So what we have here is what your examiner has set as a practice assessment task and what you can reasonably expect to get in the exam proper. So what have we got to do here? We've got to complete the following production forecast for product G, round any decimal figures up to the next whole number, if necessary. I'm assuming that that sort of thing often arises when you've got an error, but here we've got, I think, losses which could just make life fun regardless. Now, that being the case, we're then given some instructions. Closing inventory should be 30% of the following week's sales volume. Oh, okay, fair enough. So we're just given a relationship between sales on the one hand and what our stock would be at the end of that period. And we're also told 8% of all production fails quality control checks and is rejected. So hold on a moment. Presumably this failure is going to happen before they go into stock. So I think what that means is here we can do this little chappy first and then this one second. Okay? It should be quite straightforward, and we would expect it to be ordered so by the examiner. So we're then presented with this pro forma. And what we've got to do is to make some sense of what is sitting in front of us. Yeah? Some sense of how it all comes together. Okay? Well, okay. What do we have to fill in? We're given our opening and closing stocks here. Opening inventory and closing inventory. We're given the sales volume, and then we're given rejected production and total manufactured units. So we're making a distinction between, I suppose, good production, the units that are not defective anyway, and the total units that we would have to manufacture to achieve that. Well, okay, it's the sort of thing that we're going to do step by step by step. Where do you suggest we start? What do you think? Where do you think we should start here? Well, okay, we're given those two instructions at the top. I think we just start with the first instruction and see whether we can follow that. Closing inventory should be 30% of the following week's sales volume. Okay. So, closing inventory, it's got to be 30% of the following week's sales inventory. Presumably, it means we do something like this. We've got our following week of 69,000, and that will dictate the closing inventory in week 1 here. So all we have to do is to take 30% of 69,000, which I have a sneaking suspicion comes to 20,700. Now, it's worthwhile thinking carefully through that first bit. Because once you've thought through the first bit, then you know the order of how things are going to work all the way through. Okay? So all we want to do is to work onto the next one. I don't know if I can tidy this one up easily. Hold up. Oh, maybe not. I'll tell you what, I hate that yellow colour. We're going to get rid of it. There we go, 20,700. And all we want to say is we want 30% of this value, 20,100, and 30% of this value, which I believe is 21,000, and 30% of this value, which is 21,600. Okay? So we're slowly building up the bits and pieces here. Notice that these are all blanked off because when it comes to week 5, we don't have sufficient data for it. So don't worry too much about that. Just be grateful that we've done what we have to do. Now, we've established what the closing inventory is. What's the relationship between closing inventory and opening inventory? Well, most definitely yes. The relationship is simply this. The closing inventory in one period will become the opening inventory in the next. So if the closing inventory in week 1 is 2,700, we simply copy that in to week 2. And so on and so forth. I've, out of habit, filled in week 5, although we didn't need to do that, if you remember, and you wouldn't be able to fill in that field in the exam. Now, what we need to understand is the relationship between these 3 elements and good production. And the way it's laid out is not very helpful. So I'm just going to ask you a very simple question. We haven't got a box to fill in here, but could I ask you what has happened due to stock during the period? Has there been an increase or a decrease in inventory? What's happened? Well, I'm hoping that you're shouting at the screen that we started with 20,000 units, we ended with 20,700. Therefore, there is an increase of 700. And I always think it's easiest to do it this way. Week 2, we find that there is a decrease of 600. Week 3, there's an increase of 900, and in week 4, an increase of 600. Easy peasy lemon squeezy. Now, once we've got this increase or decrease, what can we say? If there is an increase in inventory, what does that mean? Does that mean that we need to produce more or less? I can hear you all shouting and screaming at the screen that we must produce more. So we add 700 and we see that we must produce 20,700 in order to both fulfill the sales that we need and any change in inventory. If we take 600 away from the sales volume, oh, pardon me, I've managed to take the wrong number completely, haven't I? I'm adding it to the sales volume, and the sales volume is 68,000. So we'll say 68,700. Thank you so much. So if we look at week 2, the sales volume was 69,000. However, stock or inventory is falling by 600. So we need 600 less produce, 68,400. If we look at week 3, it's increased by 900, and therefore we need 900 more, 67,900, and increased by 600, 70,600. Okay? Now, we know that we're scoring good marks for all of the things that we filled in so far, and that is not very difficult. I think we can cope with it. And just to tidy things up, just so it's easier for us to see, all of those are going to be solid mark getters in the exam. What do you think the examiner said about whether this was done well or badly in the exam? Well, he said, not surprisingly, this is something that you can do, and I would expect you to do it. But please note, I made a stupid error a moment ago, and that is something that you have to make sure that you don't do in the exam proper. Okay? So whatever happens, we've got to be seriously careful to pick the right number and slot it in the right place. Now, we've done that much, that's fine. What we want to do now is to look at rejected production. So if we just go back to the question, we were told, we can get rid of all of this nonsense now. All we want to focus on is on this. 8% of all production fails quality control and is rejected. Okay? Well, that's fine. Okay, that is fine. But let's just think about it. We are seeing that that is the rejected production, 8%. And presumably what we're saying is that there is some relationship between good production and total manufactured units. Everyone quite happy with that? So my simple question to you is this. When we talk about the 8%, what does it relate to? Does it relate to the good production, or does it relate to the total manufactured units? What do you think? Well, okay, in simple terms, aren't we going to say something like this? We've got our input, yeah? And we've got our output. And any rejection, any rejected product, when we say 8% here, it relates to the input and not the output. Does that make sense to everybody? That's the way we'd normally play the game, isn't it? Yeah? So, what is the input here? Well, the input would be the manufactured units. That's what we have input to this quality control check. Yes? And that means that the good production will be the other bit, the 92%. Does that make sense to everybody? And I think that that's the way that you've got to play it, because if you play it that way, then you're going to have no difficulty dealing with anything here. So, what does that mean in the context of this question? Well, what it means is that we've got to churn out some numbers. We see that the good production is 68,700, yeah? But of course that relates to 92% and we want the 100%, yeah? So couldn't we do something like this? Well, we could get the total manufactured units by taking 100 over 92. But I think we have to fill in everything. So my suggestion is simply to say that rejected product will be 8/92 of that. Does that make sense to you? Yeah? The relationship between the good production, the 92%, and the rejected products, the 8%. Okay? So, from that perspective, we see we've got something like 5974 for week 1. And then once we've done it once, we can easily do it more than once. We've got 68,400 multiplied by 8 over 92. Let's see that what we've got here. And we get 5947. 5947.8. What must we do? Must we round down or must we round up? Well, we've got to round up for a couple of reasons. Firstly, it's the only logical way of doing it, on the basis that if we rounded down, we wouldn't quite produce enough units. So we've got to round up. But the fundamental reason why we must round up is, did you read the question carefully enough? We were specifically told, round any decimal figures up to the next whole number of units. You must follow the instructions made by the examiner. Okay? So, if we trot these numbers in, we've got 5974. Numbers all over the place. Make sure you get them right. 5948. Let's do it together this time. 67,900. You probably, once you've done it a couple of times, don't have to write it out. You can just do it. Multiplied by 8 divided by 92 comes to 5905. Yes? And 70,600 multiplied by 8 divided by 92, 6140. Now, the only criticism I have of this question is that the way that everything's laid out, it's terribly easy to pick the wrong numbers, because the final thing that we want to do is to get the total manufactured units. And if we're looking for the total manufactured units, let's just get rid of all this because it's annoying me. What we've got to do is we've got to make sure that we add the two appropriate columns together. In fact, I'm going to get rid of more just so it's easier for us to see. Yes, in order to get the total manufactured units, it's not difficult, it's just adding those two. But make sure when you add them, because I did this twice wrongly when I was preparing this question, make sure that you add the correct two numbers together. So I believe we've got 74,674. We've got 74,348. We've got 73,805. And we've got 76,740. Okay? So, how many marks have we managed to score here? Well, I don't think that this was particularly generous. I don't think it was a difficult task, but there's quite a lot of faffing around. You get 10 marks for this, okay? So you may agree or disagree with me. It's a free world, but I think that we could have been offered a bit more given just the amount of stuff we had to do. But of course it does go on. We're then told other stuff. You have the following information. 61,000 items of product W will be manufactured next week. Each item requires 11 kilos of raw material. 5% of the raw material is wasted during manufacture. The opening inventory will be 84,000 kilos. The closing inventory will be 80,000 kilos. So just looking at this, opening and closing inventory, what happens? Is there an increase or decrease in stock? Well, there's a decrease, isn't there? So it's going to be minus 4,000 that we're going to have to put in somewhere. And then we've got to look at the usage. Well, if we multiply these two together, we've got our usage, 61,000 multiplied by 11. My brain is hurting. Is that 671? Oh, it is. 671,000 kilos. But 5% of the raw material is wasted during manufacture. So if we go back down to what we had before, I suppose what we're saying here is that we're working from somewhere here and we're working down to purchases down there. Okay? And what we've got is we've got some sort of loss somewhere around here in terms of the material usage. So my question to you is this. How do we go about it? Well, first of all, we want how many kilos are required for input to production. So, input to production, where do we have the loss? The loss is something like 5% during manufacture, okay? So presumably to get the kilos that we need to put in, we're going to have to include the loss that we have suffered. Now, this is precisely the same issue that we had before. And all we see here is this. We've got 671,000, what we calculated above, and we're going to have to multiply by what? Well, we know that the loss is 5%. That means that the good output is 95%. So what we want to do is to say, well, we want to get back to the original 100%, the loss we had before. We multiply by 100, divide by 95, and we end up with something like 706,316. 706,316 are the amount of kilos that we need input to production. So once we've done it once we've done that loss detection thing once, I think we appreciate how we go about it. If you don't like it, remember the input, the output, and the loss idea to make sure that you're getting the right numbers. And how many kilos must be produced? Over to you. Well, don't we have to produce 4,000 less than the kilos that we have used? So we take 4,000 away, 702,316. Okay. So, Our final one, I don't know if we have time here. The following information is how many overtime hours should be budgeted? Wow. So how many hours are required? So if we take 88,000 and 25 are produced in one labour hour, couldn't we say 88,000 divided by 25 gives us 3,520 hours. The staff, 15 staff working 180 basic hours is 2,700. One minus the other, 820. That is our answer. So, the two things that you have to remember are simply these. When you deal with anything to do with variances like this, budgets like this, on the one hand, you've got to make sure that you understand the flow from sales to production to usage to labour. And the other thing you've got to understand is how do I deal with losses? Remember that input and that output. Practice these two things and you will be successful in your assessment task. Good luck to you.